If you're looking for highly educational market analysis, you're in the right place. You're in the Transparent FX Academy. I'm Nick, a top author on TradingView with over 190k reputation points. So without wasting any more time, let's jump straight onto the charts. In today's video, I will be speaking about USDJPY. Now, as usual, what I will be doing is first providing a complete multi-time frame top-down analysis. Then we will also check what we have when it comes to the commitment of traders, which is basically the COT data, so what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on this pair. Now, starting from the monthly, what we can see is that we have just approached an incredibly strong level of supply and resistance. In fact, exactly from here, the market started all this move to the downside. At the moment, we are once again testing this exact same level, from which there is definitely the possibility to see at least a short-term rejection to the downside. So here on the monthly, everything seems quite bearish for a potential short-term correction. Dropping down on the weekly, what do we see? Now here in the weekly time frame, we can see how the market first created this very strong impulse. At the moment, the market definitely seems overextended to the upside and in need of a correction. So if we take our Fibonacci from the low to the high of this impulse, what we can see is that we have a 0.382 Fibonacci retracement, which is at the moment around this area, which would be our first potential downside target if the market were to create a correction, fading away from the incredibly strong resistance that we have already identified by looking at the monthly time frame. So for now, monthly and weekly both are indicating a potential short-term correction here for USDJPY. Let's drop down on the daily time frame and see what we have. Now here in the daily, we can see that the market at the moment is testing structure. In fact, what we know is that this red candle here, which basically had the wick, which started here, the market created this red candle testing this zone and immediately rejected it to the upside. Now we can see that the market just retraced once again exactly to the same area that stopped the correction here before this rejection to the upside, and once again the market has started to reject it to the upside, meaning that at the moment this box that we have just placed here on the chart is the zone that the market is respecting as support. We can see that clearly here twice. Now, if the market will manage to successfully break below this support, at that point all that previous support would become resistance. So if we were to actually get a break below this support, on the retest of the previous support and resistance, that would be a very interesting area, instead of which we could be looking for a potential move to the downside, right? A potential setup. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data specifically for the JPY, we can see how lately the net positions for the JPY have been dropping massively. In fact, we went from having minus 55k net positions all the way down to having minus 102k net positions, with 2.2k shorts added with the last report and 21k longs getting closed, which obviously makes the JPY very weak, and we can see that already reflected here in the price action, with the market creating this massive move to the upside. But what we can see now is that the move to the upside has already happened, meaning that in a situation like this where the market is overextended, if we were to create this correction, it wouldn't be a long-term correction because clearly we are seeing weakness of the JPY. This would only be a short-term correction before then the continuation to the upside. Basically, just a fade away from the previous supply that we have here before then seeing more potential continuation to the upside. So how we could be approaching this potential short-term shorting opportunity? Now, first of all, we need to see a successful break and close below this support. Until the market will remain above this support from a daily closing perspective, this market can easily continue to the upside. But if we actually get a successful break and close below the support after a break on the retest of this previous support, which at that point would be turned resistance, this is where we would have something interesting. And the way in which we could be approaching this is, as usual, being reactive and not predictive. The monthly, weekly, and daily combined with the CO2 data, those are the best time frames from a directional perspective. And from a directional perspective, everything seems quite bearish if we get a break below the support for a potential move to the downside to reach this red candle that we have here, which is the nearest support that we have here from a daily perspective. So if we get a successful break, after the break on the retest, inside of here, we would be monitoring price action from an intraday perspective, 4 hour and lower, which are the best time frames when it comes to the confirmations. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries, only at that point, we could be looking for a potential short with a good risk to reward and good probabilities at that point for the move to the downside if the market were to create one of our valid entries inside of this area. Now, if you don't know what I'm speaking about when I say valid entries and shifting environment from bullish to bearish, that is part of the mentorship program, which you can now access completely for free. The link is in the description. I really suggest that you go and check it out. Also, if you enjoyed this video, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next video.